conference, falling every year in January, is always a great opportunity to look forward to the year ahead, to what's in store for the region's economy and its capital markets. Well, I'd say that this year is the case. This is the case more than ever. On the one hand, the world is more uncertain and volatile than I can recall, at least since 2008 and 2009 period. The effects of the coronavirus have permeated every part of the regional economy, with lockdowns and their on and off nature severely curtailing growth, and governments forced to spend billions on supporting their citizens and businesses through hastily constructed support packages. And uncertain, volatile too, because we just don't know for sure when we can expect things to get back to normal. This year we all hope, but the vaccines will take time to do their magic. And until then, governments, and in particular the sovereign debt management offices, will have to stand ready to support their economies through borrowing. And yet, thanks to quantitative easing, impressive and determined responses from governments, the support from multilateral institutions, and no little skill from the debt management offices themselves, capital markets, including the emerging markets, are strong and calm. Almost at every turn, investor demand is phenomenal. These conditions have carried over into the new year, to the extent that it is not just the sovereigns enjoying exceptional conditions, but also banks and companies. And it is not just the conventional deals that are being well backed, but also green and sustainability-linked financings too. Whether these strong conditions will continue and for how long depends on the support of central banks, as well as governments, and the severity of the spread of the virus. However, having shown such support from the very early days of the crisis, it is unlikely that central banks and governments will withdraw support early. So despite the health emergency, markets look set to be supportive for the year ahead. I wonder whether my panelists agree with that. Well, before I ask them that very question, I'm going to invite them to introduce themselves to you. And why don't we start with Daniel? Please, why don't you introduce yourself to us? Daniel, I think you're on mute. Sorry.
Oh, I'm sorry. Good afternoon. I'm very sorry. Good afternoon to everybody. Best regards from Bratislava. My name is Daniel Bytcanek, and I'm responsible for running Slovak debt management office called ARDAL.
Thank you very much. Zoltán, let's hear from you.
My name is Zoltán Kurali. I'm the CEO of the Hungarian Debt Management Office, AKK.
Thank you very much. Karol?
Hello.
Hi,
My name
Karol.
is Karol Czarnecki. I'm the director, the head of public debt department at Polish Ministry of Finance in Warsaw.
Thank you, Karol. And Marjan?
Hello, everybody. My name is Marjan Divjak. I'm Director General of the Treasury Directorate. I'm responsible for funding operations of the budget and also for the liquidity management of the budget and of the state. Thank you very much for the invitation to this panel.
Pleasure. Alexis, last but not least.
Sure, good afternoon, everyone. Alexis from BNP Paribas in London. I'm in charge of DCM for the CEEMEA region. Good afternoon and Happy New Year.
Very Happy New Year to you too. Look, I need to remind the audience that there is an opportunity for questions, which you can post in the live discussion box that you should see at the side of your video screen. They will then be fed through to me, and hopefully we'll have a few minutes at the end of this discussion to put those questions to our panelists. But let's begin with a question from me. And Alexis, I'd like you to kick us off if you can. But so we're back for a new year. So how are we feeling about our prospects to raise new issues in these first few months of 2021?
Thank you, Toby. I think we can remain constructive, but as always, with a lot of humility, because I think the big lesson of last year has been that the unexpected did happen. Constructive, why? Because I think we do continue to benefit from very robust pillars supporting the market. I'm going to go very quickly on central banks. I think everybody will read my mind. The market is benefiting, especially to a great degree in this region, from the intervention, the proactive intervention of the ECB. That is a tremendous help, of course, in times of crisis. Second, I think the region, the CEE region, did enter the pandemic crisis of last year on strong fundamentals. And here, obviously, I'm talking about contained level of debt, which most of the panelists on this board are managing on a day-to-day basis. The CEE region was historically a region with low debt to GDP ratios and with conservative deficit as well. The GDP growth had been also sustained. So the pandemic hit. It was a very hard shock for the region, just like for the rest of the planet. But it was a region which was cruising already on debt reduction mode and on strong fundamentals. The third reason why I think we can be optimistic and constructive is the market has remained open. You saw the last couple of days since we all came back from holiday. There's been already an active primary market. Marjan, you led the charge already, opening the space with a very proud signature of the Republic of Slovenia, and we're seeing already some other transactions. So we have a market which is open. I think another reason to be optimistic, I think, is the sovereigns have clearly opened and dominated the market last year. And I think their signature is now offering a clear boulevard, clear avenue for other types of issuers to come from the region. It can be corporates, it can be banks, although as we know, there's less bank issuances from the region, if we exclude the Republic of Turkey, of course. I think there will be opportunities in long duration, if not ultra long. You saw last year what, for example, some states have done, Israel in particular. So overall, I think constructive, environment and supported by favorable conditions in terms of yields and spreads being very low. So that's my 2 cents view, Toby. But I said constructive and humility because once again, never anticipate the possibilities of further disruptions. I think what we're living today is a clear example. Basically, I think last summer we all took the view that the second wave in the autumn would be there, but it would be more managed because we would have had a learning experience from the past. And nevertheless, I think a big part of the countries of this region of Europe are facing an actually even more acute situation on the medical front, which is causing a very strong disruption. So expect the unexpected, as one of the former All Blacks rugby coach always said. Expect the unexpected, but again, constructive from my point of view from the side of the panel. Over to you. Thank you very much.
Thank you, Alexis. You actually mentioned Marjan leading the charge into the markets. Marjan, why don't you tell us how you felt markets were last week and give us a little bit of an insight into how it was doing a deal in the early part of the year?
Thank you, Toby. The market backdrop was very constructive, as already Alexis pointed out. Not only that we are in last year's early on the market, we also actually were monitoring the markets in December, and we expected very good funding conditions early January. So it went very well. Slovenia issued new 10-year bond at minus 10 basis points. We additionally opened the 30-year bond, which we issued last October. It is very important that the bond is performing rather well, given the fact that we saw the significant plus 10 basis points sell-off of the underlying market. Spread-wise, both bonds are performing very well. So a couple of, around 5 basis points inside where the bond was issued. Need to say that we did executed a big part of our funding program. Doing that, today we issued treasury bills in the amount of nearly 300 million euros, all very close to the depo rate. Need also to say that it is encouraging to see a lot of reverse inquiries, demand for the Republic of Slovenia bonds at around 10-year part of the curve. We are positioning ourselves at around mid of the market. And yesterday we executed another 200 million of funding at the 8-year part of the curve at minus 20 basis points plus. Also, Toby, if you allow me, I would say that Slovenia entered this year very constructively. So the budget is doing much better than expected in the amount of 1.5 percentage points. So the economic growth or drop, better to say, last year will be very close to best case scenario, which was outlined by main institutions. So actually, Slovenia is in a very good place going forward. Really, thank you.
Okay, thank you. Good to hear. Why don't we hear from Daniel, Karol, and Hungary about how they feel about how things are in these early few months of the year. Zoltán, yeah, why don't we hear Hungary's point of view?
Yeah, so what we did last year was to generate quite a bit of pre-funding. So we are not so concerned about the markets as they are. Clearly, we turned around the year with reserves both on the FX side, covering essentially all the FX maturities in 21, and also significant reserves on the domestic side. I mean, we will continue. We will focus mostly on the domestic market this year, both our retail program as well as our institutional program, with weekly fixed auctions in the first quarter and bi-weekly auction schedule following from the second quarter. We will have to issue much less as a result of obviously past year's pre-funding and the liability management that we are carrying out on a continuous basis in 21 compared to 2020. So that gives us a good backdrop for the year. I mean, obviously, domestic market yields have been much more closely correlated in the recent couple of days to especially dollar rates rising, in this whole reflationary sort of trade construct that the market participants are pursuing. Let's see how this goes. I don't think it's a straight line, but clearly interest rate volatility has come back. We'll need to see how the central banks respond to that.
Thank you very much. Karol?
Yeah, thank you. Poland is entering now the new year 2021 in relatively comfortable conditions of liquidity. During the 2020, we had to face the necessity to undertake some actions to cover our financing needs. We did it mainly basing on domestic market. The international market remained a kind of auxiliary source of funding during the 2020. We operated in a way that maybe named as opportunistic, but we acquired some funding. We did 2 issuances in February and as well as in July. But we were just made by the epidemic situation to perform an amendment of our budgetary act. Seems that from the perspective of 2020, I would say that the economic performance is better than we predicted. It's also the outcome of that situation is that we are pretty comfortable when entering 2021 when it comes to the liquidity, as I said. At the moment, the factor that will be probably influence on our behavior on the markets is also the supporting program created by EU, the SURE program, and the foregoing instruments that will be launched in the nearest couple of months. So that also creates our perspective on our behavior on international markets. But at the domestic market, we are just opening for selling more bonds. Our activity is more directed on the outright tenders. During the second half of 2020, we focused mainly on the switch tenders as a way of pre-financing this year's funding requirements. Now we are decided to open for the market, using mainly the low rates, the low yields of our debt that were created by activities of our central bank, which has run its own QE mechanism, similarly to other banks in Europe. What's the current situation in Poland?
Thank you. You mentioned the SURE program, and I think we're gonna talk about that in a minute, as it does potentially have a big impact on your jobs as debt managers over the coming 12 months. But Daniel, we haven't heard from you yet. We've heard about how people are feeling about markets right now, and you're welcome to answer that question. But what I really wanted to ask you actually was, what are the key lessons that have come out of 2020 for you, and how they shape your sort of attitudes towards issuance and debt management for this year?
Thank you very much, Toby, for this question, because beginning of this year, from the point of view of our agency, is completely different like previous one. It's like case study of managing Slovak debt, because I will be very short, but it's quite interesting that we started last year in very specific position, because we had general election, and very prudent national legislation, which made pressure to decrease our cash reserve. And moreover, financial legislation was changed at the end of the year 2019. So demand for Slovak papers dropped down by 50% in the first quarter of the last year, with brand new government, and COVID crisis was approaching. And our cash reserves was enough, but still only covered maybe 100 or 120% of our needs. So we took lessons from this situation, that debt managers have to be prepared during the sunshine days for bad times, 24 hours per day and 7 days per week and 51 weeks per year, because thanks of sufficient liquidity buffer and mostly prudent risk management, this was the key pillar to support our management at the time. And moreover, you know very well, sometimes better than me, how is important to set up internal processes, including operational risk management and contingency plan. So we took lessons. It's very important also to have national legislation in public finance area under control. So beginning of this year, in terms of in Slovak case, is completely different story, because the legislation was and will be changed, and for example, debt break will be not problem this year. So we are well pre-funded for this year. So the situation is different, and we are not hurry. So our position is luxury, and we will wait for a good condition probably in the second quarter of this year.
Okay, well, a nice position to be in, I suppose. But Alexis, all our issuers are sort of saying that they're in a good position. But I mean, from where you sit, do you hear or see any concerns about how much debt is set to be issued by the sovereign, supra, and agency sectors in response to the coronavirus crisis? I mean, presumably we're all agreed that markets have coped very well with the supply shock last year, but what about this year?
No, I don't. At least not in this not in this geography. You have this debate on others, but you know, that's another subject. I think on the contrary, if I may say so, I think the market is more focused on what government needs to do to tackle the crisis. I think we're only halfway through the bridge in terms of managing the impact of the pandemic on the real economy. I think going back to normality will take time. I think there was a hope last year at some point that the recovery would come back sometime in 2021. I think as we speak today, it's possibly, time will tell, maybe not the case, or at least not before the second part of this year. I don't see, again, concerns which you described, Toby, but I think it's a fair question. If we did see that, mathematically we would see a translation into wider spread, into wider indices. But today it's difficult to observe that. So the numbers speak for themselves in terms of answering your question, I would say. But again, it's a fair one, and I think we should have it on the back of our mind and see how the next couple of months, will develop.
Okay, thank you. I mean, by extension, are there any concerns around sovereign debt sustainability creeping in, or has central bank QE allayed any fears around this subject? Again, Alexis.
Not that I'm aware of. I think if you look at the wider CEE region, the quality of issuers in an overwhelming quantum is high investment grades, very solid credits. Some of them are actually already compared for some years to Western European, sovereigns themselves. So for investors, it is very important to continue to buy those bonds because of their quality, but also because they are de facto diversification away from traditional Western European sovereigns.
Yeah.
Yes, the spread differential is tightening, but they still represent diversification for investors. So I don't think so to answer the second question, Toby.
Yeah, okay. I mean, I guess the concept of debt sustainability isn't just sort of exclusive to emerging markets.
Yeah, I think that there's a wider debate which which everybody has seen in the press already, or in which we are conscious of, is there's an avalanche. There's an enormous amount of debt in the market, right? Which is being delivered, which is being sold to the market. The numbers are absolutely gigantic. So some observers have already said, how will investors be able to differentiate between these mountains of debt coming up? Especially since the European Union sure started to issue. How are they going to compare the EU paper vis-a-vis a German paper, an Italian one, Poland one, etc., etc. So that's a debate. It's more about differentiation about the quantum. Again, the quantums are massive, as that is a fair observation, which we have to recognize.
Okay, I'd be interested to hear from our issuers whether the subject of debt sustainability, or the concept of debt sustainability, has come up in their sort of meetings with their bosses, their central bank or ministers. Is that something that you're looking at all, Zoltán?
Look, I mean, obviously, there is no question that sovereign debt needs to be repaid, right? So, from a sustainability point of view, we need to basically make sure that that service is aligned to an efficient portfolio from a cost and risk point of view. And I think, to answer your question, I think that sustainability is not a question at this level of rates or at this level of yields. And obviously there have been, there is one example, and that is the example of Japan, where this experiment with QE and sort of low rates has kind of been sustained for a long time. So I think the key here is to see growth. And that's why investors are, as Alexis said, much more focused on making sure that these countries and sort of the world is back to a footing where growth is around potential growth, and there is no disruption in the economy as a result of COVID. And then, on the back of higher GDP growth, you can have higher rates, and you can probably have some inflation, and that still will remain sustainable because obviously that the GDP ratios can decrease. I think this is going to be a fine-tuning of policy tools to make sure that there is no hard landing in this environment, but I think it's not something that the market is worried about, and that's not something that we are concerned about.
Karol, is that something you're seeing too? Not so much, nothing to worry about at the moment?
I would rather agree with Zoltán.
Okay.
We couldn't see any maximalized volatility. We saw it in the last year, but now the situation seems to be stable. We cannot see as well as any panic outflow from our bonds we issued. So the situation will depend mainly on the behavior of the real sector. So I think that all of us at the moment thinks positive of it and see the good perspective for the future. So now we do not predict as any disturbances on the market that wouldn't allow us just to perform our job. So that's all.
Sure. Okay. I mean, just on this subject, maybe I have to expand a little bit, but for example, Marjan or Daniel, what do we think about some of the suggestions towards the end of last year around debt restructuring? I think Riccardo Fruccaro, who is the Italian Prime Minister Giuseppe Conte's closest aide, he floated the idea of the European Central Bank cancelling debt issued during the pandemic. Presumably, you would think that's just thoroughly unhelpful. Marjan, let's hear from you. You're on mute. Sorry, Marjan, you're on mute. Sorry.
Sorry about this.
There you go.
So this is very interesting thinking. You outlined here. I'm aware of this. I think there are better tools ECB would have really to tackle the inflation first.
Yeah.
But I need to say one thing. So as Zoltán pointed out, we when we go on the market, we have in mind that as an issuer, the public would need to pay the debt back. This is one thing. So we are not having this kind of thoughts when we do our funding operations. This is one thing. Second, we do care about debt sustainability analysis. This is ongoing work for us. We run our models, which are stochastic and deterministic. We try to see where the Republic would be according to different macro monetary policy and other scenarios. And actually, we try to, as now I refer to Daniel, we try to consolidate when we have opportunity for that. So we try to reduce the debt. We try to actually rearrange the redemption profile when this is possible, to regain fiscal space back, to actually regain the flexibility back, so that we can it can more confidently go on the market when this is needed, which was the case in March when we were all let's say surprised by the severity of the COVID virus spread.
Thank you, Marjan. Daniel, anything to add on the concept of debt sustainability and perhaps even cancellation of debt?
Yes, please. I fully agree with Marjan. Position of the small issuers is completely different than large countries, and we have to be more careful than others. And for us, for example, debt to GDP around 60% is not acceptable in long-term perspective. But the situation, we have to find some solution. What will be after ECB activity and what we will do with the growing debt. This question will be definitely on the table. Our not very good position is that we as debt managers, we are somewhere in the gap between two worlds. One is financial market with investors and very rational approach, and on the other side there is a politician world. And we as debt managers, we are something like a dealer between these two worlds, and it's not quite easy to manage such deals. But this type of question definitely will be on the table. It is only question of time.
Yeah. Okay. Interesting. Very interesting indeed. Let me move on slightly, if you don't mind. And I think we've already heard them mention, but I'd like to just get a bit more from our issuers about whether the EU's funding activities for SURE and Nextgen will they affect your own strategies of coming to market this year? Why don't we hear from Zoltán first, and then move around our issuers?
For us, the answer is clearly no, because we do not plan to come to market this year in the national market, and on the other hand, also not being a Eurozone country, we don't perceive to be a direct competition with the EU's funding activity. I think where there is an impact, it's clearly, how much of the budgetary expenditures, these financings and these arrangements with the EU could cover, and how much that will basically take off the burden from the other sources, i.e. for us in 21 and 22 mainly it's the domestic market. So I think that remains to be seen. Also the structure remains to be seen with respect to, for example, ESG and green spending, but that's another topic.
Yes, we'll come on to green and ESG in a minute. But yeah, so Marjan, I mean, you issued a bond last week, but presumably in doing so, you probably had to think very hard about the EU and its own funding and whether you would be benefiting from any of that.
Indeed, the Republic of Slovenia applied for the SURE program to cover SURE eligible expenditures. This means for the Republic that we already disbursed 200 million euros last year, and that we actually provided funding also for this year in the amount of 900 million euros. This means that certain portion of our funding program is already secured. Also for this year, the dynamics, how this would be actually disbursed is less certain. So we expect Slovenia to receive these funds in the first half of the year.
Daniel, how about you? Is it complicated matters or is it a good thing?
In general, in our case, it's a good matter also. We also apply to SURE program, but in our case, like in many other countries also in the region, this type of program play a role as a diversification of our investors base, if I may say something like that, because the total size is marginal compared to our financial needs, but we are happy that we are in because of the pricing and some comfort. More important for us and for many other countries is Nextgen. It's more related to change our economy and our country to be closer and closer to the core countries of the EU. So this program will play more significant role in a near future. So thanks to that. So we are happy to be in also.
Okay, Karol, how about you?
As an opposite to my colleagues, I would rather say that this program, I mean the SURE program, will for sure influence on our policy, especially in the first half of the year, because we are now after the discussion with European Commission, and we see that the perspective of disbursement of the tranches of the program directed to specific countries are just ready to be dispersed. The first half of the year will probably fully cover our foreign currency needs. We'll see what will happen, what will be happening then second half of 2021. It's not the way that we are to abandon our activity on international market, but as a third in Europe, the third place, we have a third place in Europe as a beneficiary of that program. The amount of the funds is really good and high, so it will for sure influence on our policy. That means that in some way we'll just try to adopt our issuance policy, our independent issuance policy, to the activities that European Commission will plan in the first half of the year. So that's why their influence will be visible. I think that as well, the new next generation instrument will influence on every country of CEE region because of its size, first of all. The second one, because of its mechanics. We should be aware of the fact that when the European Commission will issue debt instead of countries, well, that will also limit in some way our independence in following our policies. So I think we all should be conscious of the fact. So that has above, I think the both ends of the story. That means that we've got a relatively cheap source of funding. That's first of all. That the next thing, and then the opposite to this, is that we have to adapt to the conditions that are imposed on acquiring of that funding. So I think that all of us will have to rethink in some way the way of its activity is conducted. So that's my impression of that.
Thank you, Karol. Diplomatically put. Alexis, what's your view on how the SURE and Nextgen programs will affect these issuers over the next year or so?
Difficult to answer from my point of view, to be honest, Toby. I don't think there will be any form of cannibalization. I don't believe there will be a risk of not having enough demand from investors. I think the debate will be more around pricing and differentiation. In a context where, again, most of the people on this panel and countries trade very, very similar or very close to some of the other members of the European Union. So I think the debate difficulty will be more on pricing than quantum on demand. That's my honest opinion.
Okay, so just moving on a little bit, Alexis. So how do you expect borrowers to evolve, or at least their borrowing products, if you like, to evolve over the next 12 months? I think we already heard, I think, was it Zoltán talking about perhaps longer tenors this year? Is that something that you'd expect from your issuers this year?
Yes, and I absolutely agree with Zoltán, and I think I mentioned that as well in the first question you asked me. I think going ultra long is going to be a trend. Now, I'm not saying this is what people have to do or must do, but this is something which is clearly prevalent since I would say the spring of last year. A lot of governments are going very long. I mean, I think I mentioned Israel, but if you look at the Middle East countries as well, they've been printing money beyond 30 years in dollar, which is a traditionally already long maturity. We've seen some 40 years, 45, 50 years. So that's a trend. I think completely on the opposite part of the curve. So I think we'll see also more of the very short-dated paper. And I think Karol is a good example of what Poland has done last year. Tapping very short to be able to be in the negative yield territory. It's also a trend which has emerged, which may be progressing. Time again will also tell, but it's certainly a pocket of liquidity which is opening. You can go very long term, but you can also conversely go very short.
Yeah.
Short these days. I think another optionality which the market will offer probably again this year coming up is currency diversification.
Yeah.
And again, as a humble observer, just stating what may happen, I think might be a good time to go back to the other markets. Most of again the sovereigns in the region have issued, and rightly so, in euro-denominated paper as far as international borrowings is concerned. We've seen some USD, for example. We've seen amazing diversification. Zoltán, you went again to the Japanese market. I think this trend may be coming up more 2021 because again, in the context of so much debt to issue, it's always important to remind ourselves who else apart from the eurozone investors can participate and have participated in the past. I mean, I recall a lot of transactions done with most of you, Marjan, Zoli, and even with the ARDAL on the currencies and Poland. I think it's probably going to be back on the surface. And final, I think other pocket of liquidity. I'm sure you'll have a follow-on question, Toby. Is the ESG, which is becoming more and more prevalent.
Yeah, we have a little bit of time left to talk about ESG. I think we should, given that it's impossible to talk about capital markets without talking about ESG in this day and age. So yeah, I mean, in fact, we do have a question from the audience, which is, if you have or want to have both green and regular bonds, how much green issuance do you need in order for it to be sufficiently liquid not to have to pay an illiquidity premium? Why don't we start with Karol there, because I know you were the first sovereign green bond issuer, if I'm right in saying that.
Yeah, thanks a lot. The situation shows that we don't have to issue green for at least 2 years to have it liquid. No, so I would rather say that our assumption was that we would be present on the green market every year. Due to the fact that 2020 seemed to be a different year, from our position as an issuer on the international market, especially in the spring, we abandoned that idea to be visible on that market in 2020. In 2021, we are considering such a move and coming back to the market. But I think that the main question is not the question of frequency of the being on the market, but the frequency of the size of the market. So I think that the most important thing is to have a relatively high size, good to be distributed among investors, and for that reason, I would rather to opt for the situation that no such that we should not announce a kind of policy that will be visible every period of time we assume, that rather to have a good assessment of real demand for the bond. So that means that something that could lead us to place a bond at relatively competitive conditions, and to have a good size for all transaction. That's my point of view, and thanks for that.
Thank you, Marjan. Just if I could ask you the same question, which is if I can remind you, if you have or want to have both green and regular bonds, how much green issuance do you need in order for it to be sufficiently liquid and not to have to pay an illiquidity premium?
I don't think we would actually have issues with that. So the demand for green securities is enormous on the market.
Yeah.
The problem we have, so I need to say briefly that we have the framework, the green framework in place, approved by Sustainalytics. The problem we have is the volume of green eligible expenditures to actually satisfy the bond size requirement of our own, which is one billion minimum on the euro market. So this is the problem we have, and we are now trying to revisit the program, the framework, and to see how we go from there.
Thank you very much. We've probably got a tiny bit of time to hear from Zoltán and Daniel on that same question. Zoltán?
Yes, I agree with Marjan. I think it's not a question of illiquidity premium in green versus conventional. There is none. What it is actually to be able to issue a benchmark size, and in euros that is indeed €1 billion, and for that you need eligible expenditures based on the market standard at the moment, which will cover that with a significant margin to make sure that there is no room for error in the allocation process afterwards. I think that's that. If you do not have amounts satisfying this benchmark size, then I think we demonstrated that the Japanese market is actually a good alternative and provides for new pockets of liquidity compared to your conventional investor base.
Thank you. And Daniel, to finish this off.
I'm not good expert in this area because we are probably the most conservative country in this area, in this region. So for us, green bonds is something like political project, not financial project. Then when we compare pros and cons, we see more cons than pros in our case. So we are not very flexible in this area. So we are watching and observing only other markets like FX, etc. So
yeah. Okay. Well, look, thank you very much indeed. And look, we are over time, so I'm going to call this to a close if we don't mind. I'd like to thank my panelists. Tremendous discussion. Thank you very much. Karol, Zoltán, Alexis, Daniel, and Marjan, thank you very much for joining us. I wish you the very best of luck for the next 12 months, for the next year. Hope you stay healthy, and I hope all your bonds are successful. And I'd like to thank our audience for tuning in and listening. I hope it's been enjoyable and useful.